So I think that understanding the exit landscape for your thesis, for your industry, and for your geography is really important.
Hey everyone, this is Prashant and I'll be your host of the VC 10X podcast. And today we have Christian Rangen with us. Christian is the chairman and co-founder at Link Capital, one of the most active investors in the Nordic region. In this episode, we talk about investment thesis at Link Capital, Nordic startup ecosystem, why startups need to think about exit strategy from the very early stages, how to pick the right investors to navigate towards an exit, Christian's biggest learning investing in startups over the years, and lots more. So without wasting any time, let's dive straight in. Hey Chris, so good to have you on the VC 10X podcast. How are you doing?
Thank you. I'm good. Great to be here.
Yeah, pleasure hosting you on the podcast and talking about the Nordic startup ecosystem. Before we dive into it, can we first have your story and how you started investing?
It's a great question. I think like all of us, we start small and then we build bigger. So I started early stage investing about 15, 16 years ago. Small angel tickets, getting involved with the startup ecosystem, getting involved with Startup Weekend, and just building from there.
Great, that's awesome. And how you got to starting Link Capital? Can you give us a story about that as well?
Yeah. So that is that's opening for an excellent series of questions. And I think our first fund, which we tried to set up around 2015, didn't even get off the ground. Like we were missing everything: legal structure, advisors, regulatory, everything. And then a few months later, we tried to do a second fund, and we realized we had the complete wrong people. And then our third fund, which was Link Fund number one, that got started in 2016. It really got off the ground in 2017. And since we have done fund number two, and we are now on fund number three. But it was really trying to fix the missing link in the Nordic ecosystem between friends, family, angels, and the first institutional capital in. So that's why we started, and that's how we got started.
Great, and therefore the name Link Capital, right?
Exactly.
Great. Now let's talk about your investment thesis at Link Capital.
Sure. So we have three funds, and fund number one and two have been largely generalist tech funds, where we have been investing into various software platforms, climate tech, energy tech, aquaculture tech. So it's really a broad-based technology. For fund number three, which we're investing out of now, we are very much a energy transition fund with a thesis around electric mobility, energy software, and clean energy transition. And we are a pan-European fund with investments, networks, LPs, GPs, pretty much all over Europe.
Great. That's very interesting. And now let's also discuss the startup ecosystem in the Nordic region, as you are one of the most active investors in that region. So can you give us a glimpse of how vibrant is the startup ecosystem there, and what are maybe the most active sectors in the Nordic region?
Of course, the Nordics as an investment region has really been changing. And today, like you say, it is a very vibrant ecosystem. There's a lot of deals, there's good exits, and you have everything that you would hope to see. When we started investing in building about 15 years ago, this was not the case. We built out one of the first co-working spaces. We built out one of the first accelerator programs. We built out a venture building studio many years ago. When 500 startups first came to the Nordics to set up shop, we followed them, we helped them, we introduced them, and it was just difficult for everyone. Like every piece of the ecosystem was less mature. Today, it has been growing, pretty much exponentially. And there's a lot more experience. There's a lot more high quality deals. There's a lot of very knowledgeable investors. And it is actually a very, very good place for early stage investors.
That's great. And what's the most popular sectors, or what do most startups look like? Like every country or region has their own flavor of startups. So what's the flavor in the Nordic region?
The flavor in the Nordic is very much tech, so broad-based technology companies. Now, where I am on the west coast of Norway, We have some of the biggest energy companies in the world. So you'll find a lot of energy tech, energy transition, clean tech. Um, but looking at the Nordics as a whole, you'll find fintech, health tech, biotech, life sciences, platforms, marketplaces. So very broad based tech ecosystem.
Great. And another question I'd like to learn about is how is entrepreneurship promoted in that region? Is it being taught in colleges, or is it also something that working professionals are looking forward to? Right. So, would like to understand how this trend is coming up. Like over the years, how has the startup ecosystem matured in that region? What has been the major reason for that coming of age? Right.
Yeah. Well, just like you said, it has been maturing, and there are many reasons for this. One reason, obviously, is we're looking around the world and we see a lot of value creation and value capture happening for early stage companies. But I think the defining moment for Norway, which of course is just a small part of the Nordics, was around 2014. We had the oil and gas crisis. So in the span of a few months, the oil price went from 115 a barrel to $29 a barrel, and thousands of people got laid off or lost their job. And sort of in that transition period, 2014, 15, 16, we just had this spring of incubators, accelerators, venture funds, angel networks, like the whole lifestyle, the whole ecosystem just went boom. So if there's one thing that we could pinpoint, it was really the oil and gas crisis that sparked a lot of things in Norway. But it is part of a longer term trend where all of the Nordics are developing. And today, of course, there are so many meetups, there's so many networks. Pretty much every university, every business school, everyone will be teaching entrepreneurship. And you will find unicorn founders and super angels, and you have all the building blocks right here in Nordics.
Yeah, that sounds great. And like let's talk about the companies that you're investing in through the Link Capital Fund, right? So what exact things are you looking for in those companies while making the investment decision?
Yeah. So again, in our funds number one and two, we have about, let's see, just over 50 companies, about 55 companies in total. And these companies are largely Nordic tech companies. For fund number three, which we're investing out of right now, we are looking for companies within, again, the energy transition. So electric mobility, EV charging, solar, batteries, smart energy software solutions. And there's such a strong deal flow. It's crazy. We are looking for five kind of factors. So number one, energy transition. Number two, software or a significant component of software. Number three, can this thing scale? So does the founders have what it takes to scale this? Number four, which we call the magic milestone, which is one of our internal metrics that we work on. And then finally, the exit potential. And we do a lot of work around the exit potential from day number one. So those are the five things we're looking for right now.
Great. And are the Nordics mostly building for the region, or are they building for the world?
Yeah, they're absolutely building for the
Right.
world.
Right.
Absolutely. Now there's a convenience about a home market. So many companies will quite quickly and naturally go to the other Nordics. But to get scale, you got to go out of your home markets.
Absolutely. Very true. And you talked about the exit potential, right? So
Mhm.
how are you trying to assess that what's the exit potential for this startup that's maybe still in the
Yeah,
early stages?
yeah. So I think there's a big misunderstanding in terms of, can an early stage company even talk about exits? And some people say, no, it doesn't make sense. Like you're too young, you're too immature. While others, including us, will say, no, you can absolutely. Like we believe that you have to know and you have to understand the exit options, the exit routes, and the partners and people that will take you there. So when we assess any investment, we do multiple exercises and multiple levels of analysis around potential outcomes, around potential exit routes, around the key partners and investors that will help you get there. And I think that part of the reason is that what we've seen in the Nordics is a lot of early stage companies go public quite early. So you can have a company that, maybe in the US would go for a Series A, so a big Series A. Well, this company may actually choose to go public in the Nordics. And of course, generating much faster liquidity for investors and so on. But I think the most important thing for us is most founders are naturally not experienced with exits. So when they're starting, kind of a startup journey, they don't really understand what that exit side of the equation look like. And our job is to help them, coach them, guide them to understand that the exit is a big part of your strategy from day number one. So we put a lot of work into that question.
Absolutely, yeah. I've heard some of the VCs even on the podcast say that that early we don't look at the exit strategy, or we don't ask that question, that what's the exit strategy, but maybe we internally as a team think about that. But I think like every entrepreneur should be having that at least in their mind, that what's the long term ultimate outcome they are looking for, right? And what's the pathway to that? And only when you know what you're working towards, then you can actually see the pathway from point A to point B. So it's always good to have that. So has it ever happened that they were not aware that what's an exit strategy, right? And then you had to tell them that, okay, as investors we are looking for an exit, that's the end outcome. So and these are the potential ways in which you can get an exit, so you should be thinking on those lines as well.
Yeah, so we have those conversations even at the due diligence stage.
Yeah.
And what we really reinforce is the importance of choosing the right investors for the type of exit that you want to have. And we also believe that there's good deals to be made by getting an M&A transaction or a trade sale transaction within the first 2 or 3 years. Founders get paid, investors get paid, the companies kind of grow into something else. And that's just a natural part of a well-functioning ecosystem.
Absolutely, that's correct. And I think as an ecosystem, we should also like promote early exits, because later exits are becoming the trend these days, that okay, everyone is chasing $1 billion valuation, right, becoming a unicorn. But I think there are big successes to still be had in case you just go for an early stage M&A, right, something like that. So like you just mentioned one thing, that we tell them that there are different kinds of investors that you should target depending on what's the kind of exit that you're looking for, right? Can you throw more light on that? How does that differ? Like, let's say I want to go for an M&A kind of exit, then how does that impact the kind of investor I should be targeting?
Yeah, it's a good question. So if we simplify it a little bit, you have your angel investors, and no angel investor is going to be leading much work around an exit. It is very, very unlikely that an angel investor will acquire you eventually. So you can bring in angel investors, but they're not going to be really helpful towards the exit stage. Then we have a little bit more later stage VCs. Now, the good VCs, they have a lot of exit networks. If you go with the corporate, you need to understand whether you are a big strategic fit for the corporate or not. And you can bring in a corporate at a pre-seed stage, and you can have discussions with them like, if we reach certain milestones, what would a potential acquisition look like? Or you can bring in a private equity firm. They would typically come in, at a B series, maybe an A series. And the private equity firm will say, we are interested in acquiring 51% today. And then we have a sort of model that will take us towards 100%. Or a lot of our companies are working with infrastructure funds. So we can even, again, at a seed, maybe a seed plus, maybe a pre-series A, we can bring in an infrastructure fund. And the infrastructure fund, again, will typically invest for 51% ownership, and then they'll have a stepping stone towards a full exit. So I think that understanding the exit landscape for your thesis, for your industry, and for your geography is really important.
Right, that's very interesting. So let's talk about the part where you talked about like a private equity firm taking, or an infrastructure fund taking a 51% ownership, right? At what stage of the company is that kind of a deal possible?
That is a Brilliant
Yeah.
question. So the most recent transaction that we have in one of our
Mm-hmm.
funds is a Norwegian company called What If
Mm-hmm.
EV, and they got started, and then exactly 14 months
Okay.
later, they had raised a 52 million euro transaction
Okay.
for 51% ownership from a French infrastructure fund.
Right.
And that means that in less than 1.5
Right.
years, they were able to raise pre-seed,
Right.
seed, and then do a infrastructure
Mm-hmm.
transaction.
Very interesting. That's great.
Yeah.
And does, like, when that kind of a deal happens, like it's mostly the majority ownership of the company is changing at this point. So how does the structure of the company change? Is it the same leadership, or everything remains the same? It's just the ownership that is changing, or are there more things that are changing at that point?
Yeah. So of course that will depend, but in this specific deal and also in general, it is really just the ownership, and you can expect to typically get two new board members representing the new owner, and then as long as the management team can deliver on the plan, there's no reason to be replacing them. But you may have founders that say, I'm a founder, I like to start companies, and now that we're at this stage, I'm going to leave, and we'll bring in more professional management. That's also a possibility.
Right, that's great. So after that point, there are no further rounds that are raised. It's mostly the private equity fund or the infrastructure fund that will take care of the financing of the company from there on, right?
So that can vary a little
Mm-hmm.
bit, but what you usually have is that you have, let's call it financial infrastructure investor transaction number
Mm-hmm.
one. And then once you reach certain milestones, you will have transaction number two for adding more
Right.
equity. And then depending on the company, there may be an IPO at the end of a couple of years.
Got it. Got it. Very interesting.
Hmm.
Great. And I think this is one aspect I think that a lot of entrepreneurs need to be coached on. That I think uh, most entrepreneurs, like if you build something tangible enough and you've been through it for 2 to 3 years, been in the grind, and you've built something substantial, then I think you should be able to get an exit at that point, and a good exit, right? It's not like a bad exit, right? And I think this possibility that's also there, this is also an option. This needs to be promoted more, and I think this is good for everyone, right? It's good for your investors, it's good for you. You get an early exit now, maybe you're free to do more things, or you have less stress, right? Because you have already had one positive outcome. So I think this is something that more founders need to be aware of, right? So thanks for sharing this aspect, right?
Mhm.
All right. So now let's talk about portfolio support. So once you have invested in a company, how do you support them in getting successful or getting to a successful like exit, that like you said?
So we have a very structured process for this that we have built over the years. And we basically, you can imagine a continuum that has almost no support because they don't need it, and gradually over to we take active management roles. So someone from our team can actually go in and become the CEO or the CFO or whatever is needed. We usually develop a plan together with the company of how we are going to work together, how we're going to support them. Uh, Sometimes we take board seats, sometimes we bring in other board members. But I think the biggest value add that we have is around follow on financing, getting the company investment ready for the next stage. And we run a series of programs, including a 1 month link fundraising sprint, where we take the companies in cohorts, like a mini accelerator, where we take them through a very dedicated program to help them raise the next amount of funding.
Right. So the accelerator is focused on fundraising, or is it overall
Exactly.
fundraising, right?
No, only fundraising.
Right. And how does the accelerator work? Is it like you're taking a fee or any percentage equity? So how does that work? Yeah.
No, so this is available only to our
Okay.
portfolio
Okay. Yeah.
companies, and once they are in, there's no fee, there's no
Hmm.
equity, and what we do is we work with them for four
Right.
weeks. We recommend that they have a team of founders, management, and board
Hmm.
members. and they have to commit to around 30 hours per week for 4 weeks.
30 hours per week.
Yeah.
Great. So is it more one-on-one coaching that's happening, or is it recorded content? How's that work? Yeah.
No, good
Hmm.
question. So the majority of work happens in cohort-based groups. So we take between 5 and 10 companies per
Right.
cohort, and we work with them very
Hmm.
closely, mostly in plenary sessions, but also in one-on-one sessions.
Great. That's great.
Hmm.
Uh, and like, let me ask you this. So, what's the aspect that you think that founders need the most help with, or what's that insight the founders need when it comes to fundraising and going for the next round? What do they need? They need to be coached about the most, right?
So there's a lot of things. The single most important part that we focus on is you need to have a real capital strategy, and you need to develop it much earlier. So the biggest two mistakes that we see: number one, founders start too late, and they don't really allocate enough time and focus to it. And as a consequence, they end up with bad options, bad term sheets, and they're starting to run out of time.
Yeah,
So we provide them with a very, very solid playbook. We have a methodology with 5 phases, 40 steps. And if you work through those steps, we will get you to a great outcome.
that's great. And what are you trying to optimize for? Is it the valuation that you're trying to optimize for, or is it good terms? That's it.
It's it's finding the right investors.
Okay.
So
Yep.
optimizing for valuation is not very
Mm-hmm.
relevant. You want to have somewhere between a 2x and a 4x uptick since the last
Mm-hmm.
round.
Yeah.
But it's really about finding the right investors that can work and bring value to the company.
Great. That's great. That's a great model.
Mm.
All right. So there's another thing that you run at Link Capital, and that's called Link Evergreen, right? Which is a fund of
Yes,
funds model. So can you tell us more about it?
sure. So again, we have multiple funds within the Link family. And one of those funds, like you mentioned, is Link Evergreen. And Link Evergreen is basically our own um, fund of funds. And it's been set up as a evergreen vehicle. And we are using it to invest into other funds, partially to learn, partially to build collaboration networks, partially to get access to people and partners that we may not be able to work with. But we are in a situation where we have the possibility to deploy a little bit of money into supporting other funds and the larger ecosystem, and we're very happy to do so. And we've learned a lot from those investments.
That's great. So what are the kind of funds that you're investing in, and is it only in the Nordic region, or is it open throughout the world?
Well, it's open throughout
Okay.
Europe. So again,
Yep.
our network and our focus is really Europe, slash a little bit into the US, a little bit into a few places, but largely Europe. And we are focused on impact, climate, sustainability, and technology. Those are the kind of the 4 areas.
Great. That's great. And do you have any exciting portfolio companies that you'd like to mention on the podcast?
We have
Yeah.
many. I think the most ambitious is a Dutch Norwegian offshore floating solar company. It's called Solarduck. I had the pleasure of meeting them about 2.5 years ago, and today they are the market leader. They are the category leader in offshore floating solar, and we believe that offshore floating solar is going to be just as big as offshore floating wind. So by taking a meaningful stake in this company, we are genuinely big believer in the future of solar energy onshore and at sea.
That's great. Sounds very exciting.
Mm.
All right. So this will be my last main question before we move on to the rapid fire
Yeah.
round. And so since you've been at the forefront of running Link Capital, now one of the most active VC funds in the Nordic region, right? So what are some of your biggest learnings from, like you said, failing to raise the fund the first couple of times, and now making it into a very successful fund with multiple funds running. So what's your biggest learnings from that?
That's a great question. I think that the single biggest learning is when we invest, we need to start working with the portfolio companies right away, like instantly. Like here is a term sheet, here is the investment papers. Let's start working next week. Because we see that companies where we come in with a minor investment and we may be busy, they may be busy, so we don't really get started. It's actually really hard to catch up, and time is ticking. So our recommendation is always when you raise, say, a pre-seed or a seed round, you should get your next round completed in 6 to 9 months. And working backwards from that, that means that you need to get started right now. And I had one of my founders on a podcast earlier today, and he said when we were closing, or before we were closing our seed round, we were already working on the next round.
Very interesting.
And that helps you, get capital in faster. It helps you build momentum, and it allows you to pick up the speed. So working with the companies earlier and accelerating the funding rounds, that is two of our biggest learnings.
That's great. And would like to dig deeper into like how can you be raising a round and also simultaneously be working on the next round? How do you do that in practice?
Yeah. So it's all about investor relationships. A lot of founders believe that it's mostly about the deck. It's mostly about the KPIs. We believe it's mostly about the investor relationships. And that means, Prashant, if you are closing a seed round now, I mean, you're busy with the paperwork and you're busy with sort of the closing lawyers and stuff, you should already be having conversations with your A series investors. And what happens is when you close a successful funding round, you have momentum. Good founders will take that momentum and turn it into their next funding round much quicker. And when we observe this in practice, and we call this the magic milestone, it actually puts you on a very different trajectory as opposed to kind of race around, spend it, and then you go raise the next one. So you gotta get into the fundraising quicker without having crazy valuations, because that just puts you on the bench eventually.
Right. Love that insight. Right. All right. Now let's move on to the rapid fire round, wherein I'll ask you 5 quick questions about the investing that you're doing at Link Capital, and you have to give 5 quick answers. Sounds good. All right. So the first one is, what are the sectors and regions you invest in?
Europe, energy transition.
Great. What's the typical stage of investment?
Pre-seed and seed.
What's the typical check size?
Big range from 100,000 euro up to potentially 5 million euro. Usually around €1 million.
Great. Where can founders apply in case there is a direct way? Apply for funding.
Yeah, linkcapital.no. That gets you to our website, gets you to our database, but it's really about the network.
Great. And lastly, where can our listeners follow you?
LinkedIn, by far the most active platform.
Great. I'll make sure to put all those links in the show notes below. Thanks so much for coming on the podcast, sharing such amazing insights, and happy investing.
Thank you very much, and keep up the great work you're doing.
Thank you. My pleasure.